I think it's live on YouTube now.
Yeah, I can see it's live.
Yeah. Okay. See whether I can share my screen. Let me see. Hope it's going to work. Can you see my screen?
Yeah. But I can hear your background sound as well. Yeah, we had the same issue last time. Once you're live on YouTube, you
That's okay. That's okay. Now it should be okay. Let me see. Where's the screen? Okay, I'll share the screen now. Can you see my screen now?
No, you just close it.
Just close it. Okay.
Now it's good. Yeah.
Okay. We probably start with a poll question. Yeah. See whether the poll is going to work. Is everyone able to see my screen, the poll?
I can't see the poll yet.
I can't see the poll yet.
It may take 1 minute for the poll to pop up.
Maybe. Yeah. Yeah. If the poll doesn't come out, it's okay. We probably just started. Yeah. So tonight, let me see. So tonight we are going to talk about how interest rate going to affect the property market. I think lots of people hear the news. When the interest rate goes up, we see property value has dropped. But when they mention this on the news, we need to look into the details. What they normally say is Sydney and Melbourne. But we look at Perth, Adelaide, even Brisbane, the property value is still going up. So today we want to have a big picture. When the interest rate goes up, how this can affect the property market. When we are talking about the current situation, people probably think it's too hard to predict. So we want to go back to the history as well to see over the last 20 years, even 30 years, when the Reserve Bank increased interest rate, how property value changed. So this is an overview. Let me look from the beginning. Are you able to see the poll now, Richard?
No, I can't see the poll.
Can't see the poll. That's okay. Don't know why. So tonight we are going to talk about interest rate, how this will affect the values, and also the current market conditions, the fundamental things. So like 2 years ago, before the COVID, I think just when the COVID started, we heard lots of negative news. Like the bank predict property value will drop like 20 to 30%. But at that time, we see it was good time, to invest properties, to buy properties, because the fundamental was really, really good at that time. So we want to have a look today, the current market fundamental will look like. And also the last thing we want to talk about, at the current environment, when the interest rate keep going up, what type of properties can perform better than other properties? So that's a major topics we are going to discuss tonight with Richard. If you have any questions, just leave it in the chatting area. It's very relaxed webinar.
Yeah, it's a very small workshop. We're going to have some discussion, right? So the main discussion is going to be between Junior and myself. And we want to share some stories. What are our experience in the current market, and what are the experience we had before when the interest rate went up in the previous cycles. And we want to welcome you to this discussion as well. So if you have anything you want to share with us, feel free to have a chat in the chat area. It's a very casual workshop. The more you give us, the more we can give it back to you.
Yeah, so what some places do, just introduce a little bit about ourselves. So we provide strategic consultation for buyers. Like the situation now, lots of people now feel confused, don't know whether it's good time to buy or not. Same thing like 2 years ago, when the pandemic started, people are panic. So we basically have been in this industry for many, many years, and we have lots of data and pay data as well to show people, what's the fundamental things about the property market, what's the situation now. So to give people confidence whether they should buy or they should wait. Another thing is, we work as buy agents. So no matter what kind of properties you want to buy, we provide that service for our buyers. But we also need to understand buyer situation, so we can provide some strategy and provide some more options for buyers to see what possibilities and what options they have. And the next thing is we do property development. Like our next development should be released. If it's not next month, will be the month after in Holland Park. So it's very close to CBD. If people want to buy directly from developer, we can provide this service as well. The last thing we do is we do property management. So anyone who bought the property from us, or even you buy the property from outside, we can provide property management for you. Compared to traditional property management, because we are a property service company, end of each financial year, we can provide an overview about your property portfolio. We can tell you what you can improve about your properties, whether you should increase your rent, whether you should sell your properties, or whether you should do some renovations. So we can provide a big picture to see how healthy your portfolio is. But I think most of other property management companies, they just manage your properties. They don't provide advice for you. So that's the difference. And we probably come to the topic now.
Yeah.
So this is what looks like about the interest rate. Yeah, this is cash rate. So it probably looks like a little bit low. It's only 1.35%. Yeah, you won't get this interest rate from the bank. But this is cash rate. So the cash rate is overnight rate. So if you borrow from the bank, the interest rate will be higher, normally 0.2%. Normally 2% above this. Yeah, 2% above this. So about 3.35%. So if we have a look, we think the interest rate now is quite high. But if you look at the history, we are still quite low. Yeah, our level is still like before the pandemic level. And I remember I purchased my first property in 2008. You look at the cash rate, 7.25%. So
how much were you paying?
I was paying, like mentioned, if you borrow from the bank, you need to add 2% above the cash rate. So it's about 9.25%. That's how much I paid at that time. Yeah. And the reason why interest rate dropped dramatically after that is because of 2008 financial crisis. But what happened at that time is, I remember I bought some shares, Rio Tinto. At that time, the share price is $110 per share. And when it reached here, the the financial crisis happened, the share price dropped 70%, from more than 70%. So it's from 110 dropped to $30. Yeah. So basically, it's big drop. But the property value, it didn't really change much. I remember the townhouse I purchased is 355,000 before the financial crisis. And after the financial crisis, the property value is 350,000. So it's not much difference. But you look at the share market, it dropped, some stock, it dropped more than 80%. And the currency dropped a lot as well. I remember before the financial crisis, I exchanged the currency. $1 Australian is equivalent to 7 Chinese yuan. But during the financial crisis, it dropped to $4.5. Yeah,
up to
so that's
5.5.
Yeah, that's more than 40% drop. It's a big drop as well. But the property value didn't change much. And also, you see, from 2009, I think 2009, the cash rate 3%. And then up to 2012, cash rate increased to 4.75%. So during this time, if you think when interest rate goes up, property value should drop, but it's not the case because at the time, I even didn't notice the difference. We know Sydney property value has been quite flat from 2003 up to 2012. For that 10 years, I think Sydney property market is the worst performer in Australia because before 2003 was Olympic Games. So the market was like very, very strong. People want to buy the property in Sydney. It pushed the property value up. It's
Sorry to interrupt. You were saying you bought the property before the financial crisis, which is when you bought the property, cash rate was 7.25.
Yeah, that's right.
And then it dropped to 3%.
Yeah, it dropped to 3%. Yeah.
Did you notice any difference when the interest rate, when the cash rate dropped sharply within that?
I definitely reduced my repayment. Yeah.
But were you paying attention to the property market back then? What's happening to the property market?
Yeah, I was nervous at the time because I thought, the stock market crashed. I saw property value probably is going to have big drop as well. At that time, I heard from the news, property value is going to crash. It's probably going to crash for 30%. I was very, very nervous. I only just bought the property, but it didn't happen. Like what I mentioned, in 2009, my neighbor bought a townhouse, same as mine. She paid 350,000. So I paid 355,000. It's only 5,000 difference. Yeah.
And from 2009 to 2011, the cash rate increased to 4.75. And will you notice any difference to your life, to the property market? What was the situation back then?
It didn't really affect me that much because I was able to pay 7.25%, the cash rate at that time. So even the interest rate goes up, it didn't really affect me because even the interest rate was even higher, it didn't affect me that much. But what I found is during that period of time, the property value actually went up.
And what was the media saying back then? Is the media saying the property is going to go up, or the media saying interest rate goes up, property is going to drop?
At that time, it's all about negative news. There is nothing positive because it's during financial crisis. You don't hear anything excited. It's all about negative things. Yeah, you don't know what's going to happen. You feel like everything is going to disappear.
It's the end of the world.
In terms of the asset value, so that's what happened at that time. Everyone is scared, but because financial crisis, the economy is not good. The government want to support real estate industry because when the real estate industry is good, it probably can bring up other industries as well. Because when you build a house, it's not just house itself, not just about the developer, and also other industries like building industries, supply industries. anyone want to supply a sink or cooktop, it's all affected. Even solicitors, accountants, there's lots of industries affected. So when they help improve the property market, it help with other markets as well, other industries as well. So at that time, they increase the first home grant. And lots of first home buyers, they jump to the market. They want to get a first home buyer boost.
And the property price went up dramatically when they
not dramatically, it increased about 10%.
10%.
Yeah.
So it's very similar, right? So it's very similar to what's happening now. We had a global pandemic to stimulate the economy, government putting out some incentives. With very loose monetary policies, a lot of money flow to the market. Now we're facing inflation and property price went through the roof. Now government is the Reserve Bank is trying to control the inflation, so they increase the interest rate again. It's very, very similar situation. So we're facing a crisis with stimulant too much. We want to slow down the market, we increase, but look what happened next. Looks like, because what's happening in the market, from my understanding, is you put out a policy, it doesn't, it's not going to be effective until a few months later or 1 year later. It doesn't happen straight away because the confidence doesn't drop or doesn't increase overnight. It takes time to build up the momentum. And once we found out the market is whether too hot or too weak, it's already too late. So they over adjust. Normally, that's what's happening.
Yeah, but what you notice is, see, I bought the property at this point in 2008, and then the cash rate start to drop, but property value also dropped. It dropped 8% at the time, property value, because of financial crisis. So interest rate drops, but property value also dropped at the time. And then from 2009, interest rates start to go up, property value actually increased 10%.
Mm.
So if you look at that 2 years, you think interest rate drops, property value drops. Interest rate goes up, property value goes up. If you just look at that 2 years.
Mm.
So yeah, people probably think that's coincidence. So we want to look at the big picture. We look at this big picture. This is from 1990. See, the cash rate is 17%. So if you borrow from the lender at the time, it's close to 20%. Yeah. So this is 2008, if you look at here.
Mm.
And then it dropped, it come up. And look at this period from 2002 to 2008. That's 6 years interest rate increase. What happened to property value? 2002 to 2008, 6 years. You have a look from here, it's almost 150,000 to 2008. Here, 450,000. So it's about triple the value from 150 to 450.
Mm.
So during this period, interest rate has been keeping going up. So we see the property value going up at the time. But in Sydney, as I mentioned, from between 2003 and 2012, the market has been very, very flat. So during this time, even interest rate goes up, Sydney value, property value, it's not going up, it's not going down. But in Brisbane, we can see each city has different cycle. The property value has tripled. And during the financial crisis, you see it drop a little bit at this time. This is when interest rates start to drop. Property value also drop. And then here you have a look, because of first home grant boost. So lots of first home buyers, they come to the market, they push the property value up. Yeah. And during this time, interest rates start to go up as well. And this one, a drop is because of Brisbane flood. That's the reason. Yeah.
And also the Manning bust.
Yeah. So we can see, if you look at this this chart, the interest rate, it doesn't mean when interest rate goes up, property value will drop. Yeah. If you look at this chart, you probably think when interest rate goes up, property value will go up. Yeah. So
it's a very complex issue. If you're talking about the overall stock market, generally when the interest goes up, stock market react a lot quicker than property market. Generally speaking, when the interest rate goes up, it's a bad news for the stock market. And when the interest goes up, it's not a really good news for the property market neither. As the repayment will be more, affordability will be reduced, less people can afford to get into the property. But normally when the interest rate goes up, it's under the environment of big inflation sometimes, especially this time. We just got the figure as in yesterday, the inflation was 6.1%. So it's actually better than we think. It's better than we thought. People are thinking about 8 or 9%, but 6.1% is still very high compared to the 3% target. When the inflation is up, it's also a good news for the asset price. So on the one hand, you have some bad news. On the other hand, you have some good news. So it's a very, very complex matter. It's not direct related.
Yeah, because when the inflation is high, that means when you buy everything, it's more expensive. Yeah, that's why inflation is higher. So if you go to buy anything like construction material, it's more expensive. So to build a house now, it costs more. And land become more expensive. So that's the reason, the value, it should go up. If the value doesn't go up, there's no reason for developer to develop any projects because there's no profit. Land more expensive, construction material more expensive. And if they don't sell at high price, they don't do any projects, they don't do any developments, and then no supply. If no supply, we know price is affected not by interest rate, it's affected by supply and demand. Yeah. So if no supply, the price will go up. Yeah. So that's why we want to look at the fundamental of the market. Yeah. We look at the fundamental, why we think now is still the fundamental is good. As I mentioned before, the price is affected not by interest rate. It's affected by supply and demand. We need to know how many supply is on the market. On this graph, basically you can see how much supply we have now. So the dark blue line, if you see this one, dark blue line, that's how many supply, how many listings. That means how many stocks on the market. Yeah. This color, you see, this is 2002. So it's only up to July because now we are in July. And this is well below the previous years, below 2018, 19, 20. Even last year, we know the market was very strong. People struggling to buy the properties. When they come to the market, they fear to miss out. So everyone pay above the market value to buy the properties. Even last year, the amount of listing, the amount of stock on the market is more than what we have now. That means the supply now is very, very limited. And we have a look at this one. When we look at the news, we probably see, they talk about property values start to drop now. But as I mentioned, we need to look into the details. It's same for all the major cities, or it's only happen in Sydney and Melbourne. So we have a look in Sydney and Melbourne. Sydney, the listing compared to the same period last year, it increased 12.6%. So this is overall. So this one is for combine all the listings on the REA, combine all the major capital cities. But if you look into the details, Sydney listing actually increased 12.6%. That means more stocks in Sydney for sale. Same thing in Melbourne. Because supply increased, lots of people there, they want to sell. That's why the price in Sydney and Melbourne, they have pressure to go up. The actually price goes down. But if you look at Brisbane, look at Adelaide, look at Perth, the amount of listing is more than 10% less compared to last year. And last year was even less compared to previous years. That's why we say supply is very, very limited. That's a fundamental. So when people come to the market, you need to have a look where to buy, whether you should buy in Sydney, Melbourne, or you should buy in Brisbane, Adelaide, or Perth. That make difference. Because I have been in this industry for very, very long. There is no certain period of time all the property value drop at the same time. They all have different cycles. Yeah. This is another thing. The rent, we see the rent now has reached quite high. It increased 9.5% compared to last year. This is the same no matter which city it is. If you look at the Brisbane, 12.1% increase over the last 12 months. And even Sydney, Melbourne, even they got more listing for sale, but in terms of rental market, it's quite strong. So at what stage people need to feel a bit scared is when the property values start to drop and also when the rent start to drop. If the rent is quite strong, people still happy to invest, because if you don't invest, you leave the money in the bank, decrease inflation, so money become less valuable. Actually, it's losing money. That's why people want to, buy something, buy the assets. Yeah. So if you buy property, the rent going up. So even your interest rate is going up, but because your rent going up at the same time, so it offset your financial burden. And also, the interest rate, the interest you pay to the bank is tax deductible. You can claim back a little bit as well from the government based on your tax rate. So basically, the bank increase the interest rate a little bit. Your tenant pay some of that. And the government, you can claim the tax back from the government as well. So three parties share the interest, the extra interest you pay. So
this is aligning with what's happening in the market now. So as an individual investor, we sometimes buy investment properties and rent. But as international management funds and local management funds, they have a lot of money to invest as well. So given the current situation, where do you think they are investing their money? I caught up with a management fund manager last night at an event. He actually flew in from Melbourne. It's an event from the Property Council, and he's participating in that event in the Brisbane Property Council. His management fund has just invested $5 billion into Melbourne build-to-rent projects. So they are investing $5 billion to build properties for rent in Melbourne. And he said he has another $5 billion to invest. He's looking at the potential to invest in Brisbane. That's why he flew in Brisbane, just to get more understanding of this market. And this is what they're doing, because they say the rental is very strong. They say a good potential of the current market. Yeah. They are putting a lot of money into it.
For me, the rent is quite the most important thing when I come to the investment, because when I buy the properties, I'm not a gambler. speculate, the property to go up next year and then sell it. So my strategy is to buy and hold, and I'll buy multiple properties, and I receive the rent every year. So if the rent goes up, that means my passive income goes up. And in terms of the capital gain, even because no one can predict the future, even the property value it drop, let's say it drop a little bit, right? But because I don't sell it, it doesn't matter for me, because I'm going to hold for 10 years, 20 years. Because when I retire, I rely on the passive income from the rent. So for me, even the property value it dropped 5%, it doesn't matter. I don't sell it. In long run, I know property value is going up. Everyone knows property value in long run it will go up. Yeah. So people probably are scared where the property value is going to drop in the short term, maybe next month or maybe the month after. But you ask them, in 10 years time, do you think property value will be more expensive or be cheaper? I think maybe 100% people will think in 10 years time, property value will be more expensive. So
why they want to buy at the lowest point?
Yeah, they want to buy at the lowest point, but only the God knows the lowest point. Yeah. Even Warren Buffett doesn't know where is the lowest point. Warren Buffett last year, he kept lots of cash in his company. And beginning with this year, he spent a few $1 billion to buy shares. And we see over the last 6 months, stock market still dropping, So Warren Buffett didn't buy at the cheapest price. But what he realized, now it's cheap. It's not cheapest price, but it's cheap. Yeah. No one can predict where is the bottom. We can only tell the bottom when the market is already at high point. Yeah. So like this, if you think this is a property value, not the rent, if you think this is a bottom, until you come to this point. If you're at this point, you don't know this is a bottom. So when it's affordable, it's a time to buy. When the rent is strong, that's why I'm very happy, because my plan is not to sell it over the next few months. My plan is to buy the good properties to hold for long term and get good rent. If the rent goes up, see, once the rent goes up, it's very hard to come back. It's like our wage. Once the wage going up, it's very unlikely it's going to drop. Yeah. So for me, that's good. As long as the rent goes up, lots of people will think to buy, because if they rent, that's very hard for them because they have to pay very high rent every month. 10% higher compared to last year or by next year. So lots of uncertainty. That's why first home buyers, they're scared. They want to buy properties. They don't want to pay rent for landlord, to pay off their mortgage. So I'm not a speculator. Yeah. So I just investor. Investor is to buy and hold. Yeah. Next one, we have a look this. So what kind of properties people should buy now? Based on the market information, I'll look at this one. This is Sydney. Sydney, you have a look, the most expensive, top 25% most expensive property. The value dropped 4.3% over the last 3 months. Actually, 3 months to May. And the medium price, middle range, it dropped 1.6%. And the lower range, it dropped 0.5%. What does it mean? That means the expensive properties actually, perform worse. This is the same for Melbourne. Have a look. Melbourne expensive properties dropped 3.1%, but the lower range property actually it went up 0.4%. Look at Brisbane, same. The expensive property they only increased 1.4%. Middle range property increased 3.3%, and affordable properties increased 4.6%. This is the same for Adelaide as well, even Perth, and Hobart. So no matter which city it is, this is the same trend. The affordable properties actually perform better. Even we see the news, see Melbourne property value start to drop, but the property in the affordable range still going up. That's why we see, at this market, we need to find the properties, affordable, not the property very expensive. Yeah. I'll look at this chart, this graph. That's how I got from the RP data. This is in Brisbane. Yeah. The first one is Red Bank Plains. Over the last 12 months, increased 40%. Now 500,000. You see the trend, it keeps going up. Same thing for Caboolture, increased 41.8%. You look at the trend, keep going up. But if you look at the middle range or the above the middle range properties, like Jindalee in the western suburb, you look at Sunnybank, this is the area lots of Chinese they want to buy. Over the last 12 months, the capital gain is under 30%. It's still quite good, over 20% capital gain. But you look at this trend, since May, Jindalee start to drop a little bit. Look at Sunnybank, it peaked in April. So that's why we see, affordable properties, the current market still perform better. Yeah, so lots of people before they think they want to buy in Sunnybank. If you want to live there, it's probably good. But as an investment, I don't know it's good or not. The property value, median value is over 1 million. The rent there probably only $600. So your rental yield is only 3%. And in these areas, your rental yield is at least over 4%. And also you can see the price still going up. So, and I will give some examples, my personal examples here later to tell about the property I purchased in Sunnybank. I'll look at this one. This is last month's data. That's a real data. Have a look. When they talk about the property value drop, have a look. It dropped close to 1%, minus 0.9. Well, this is caused by Sydney property market and the Melbourne property values. So Sydney dropped 1.6% and Melbourne dropped 1.1%. Brisbane increased 0.2%. But have a look at the houses and units. Sydney average dropped 1.6%, house dropped 1.8%, apartments dropped 1%, perform better than house. Melbourne dropped 1.1%, generally speaking. House dropped 1.3% and apartments dropped 0.6%, so perform better than house. Brisbane, house 0%, no change compared to a month ago. Apartment increased 1%. Yeah, so overall, it's 0.2% increase. And you look at Adelaide, it's the same. Apartment increased 1.7% and house increased 1.3%. And Perth, house performed better, 0.4%, and unit increased 0.2%. So generally speaking, you look at 5 capital cities, house dropped 1%, and apartment dropped 0.6%. This is because of Sydney and Melbourne. But we see that apartments perform better than house, at least in the last month. Actually, if you follow our webinar over the last few months, this has been the case for a few months already, since beginning of this year. So if we look at this one, it tells you we need to buy affordable property now. It actually performs well in the current market. And the current market, apartments perform better than house. What's the reason? The reason is because of cash flow. Because if you buy expensive properties, right, your rent is not much higher. People can't afford to pay expensive rent because of income. So if you buy a property, 500,000, your rent probably costs to $500 per week. If you buy a property 1 million, the rent probably is only $700. It won't be 1,000. Same thing, units, we know the cash flow is better than house, a better rent. That's why nowadays, when interest rates start to go up, people want to buy something, have good cash flow. So when the interest rate goes up, it won't affect their lifestyle. When we buy properties, we don't want to buy the properties and affect our lifestyles. We don't want to buy the properties we can't afford. We can't go out to eat. We can't go for holiday because we have to pay for the mortgage. We want to buy the property, a good cash flow. It can pay off the mortgage at the same time have capital gain. This is what we want. And by doing this, we build up our portfolio and then build up our passive income. Hopefully, during the next cycle, property cycle, when the property value doubled, we can retire. Yeah. And the rent should double as well. Look at this. This is apartment and house in South Brisbane. You can see apartments, still going up. And we can see the house, the value start to drop since May. So this is a real data, from RP data. This is paid data. This is not free data.
And we feel this from the market activity as well. We have different projects online at the moment. So we have apartments, townhouse, and house and land. Last year, if we put an advertisement online for house and land, we have a lot of inquiries. Apartments, less inquiry than house and land. This year is the other way around. House and land, less inquiry. Apartment, lots of inquiries, especially the apartments in suitable for owner occupier. You got those 3-bedroom, 2 car park, 2 bathroom. Because over the last year, property price went up by 30%. But for the people who want to buy the property, their budget didn't go up by 30%. Their savings didn't go up by 30%. When their budget was at 800K last year, this year, most likely they're still at 800K. So 800K, if they can't buy a house anymore, they can only look at apartments. I mean, by first home buyers, right? So they already missed this cycle. They're thinking about, I don't want to miss the next cycle again. I just want to buy something to live in. And also being a renter is really, really hard at the moment. It's really hard to rent a property. If you're going out for the open inspections for properties for rent, you're normally competing with a lot of people.
Yeah, that's right. In Brisbane, I think the vacancy rate is probably less than 1%.
Yeah. And
so,
previously, you do open inspections for rental properties on Saturday, right? Now, a lot of people don't even do open inspections on Saturday. They just do it during the work days and during the work hours. If you can make for the inspection, you make it. If you can't, you can't. They can rent it to anyone, anyone who can come to the inspection. So it's very, very hard for people trying to rent at the moment.
Yeah. Let's look at some real examples. Yeah. This is a general case. We look at the real things happening at the moment. This is added 2 days ago. The reason this came to my attention is because my apartment is in this building. Look at the beautiful view. And my one is 903. This is 805. This is one level below my unit, but the size is slightly bigger. It's 94 meters square. Mine is 91, I think. Yeah. So slightly bigger. And the price is very similar. So we bought this building in 2017. So this one was sold 830,000. Yeah. So now it's listed on REA. It got open inspection this Saturday, 30th July, 9:30 in the morning. So if you want to have a look, you can go there, have a look. It's listed for 1.2 mil. That's about 50% above what they pay. I don't know what price going to be sold, but it will be very similar to this price, will be around this price. Yeah. So we assume it's 1.2 mil. It's about 50% capital gain over the last 5 years. Yeah. But the good thing with this property is positive cash flow. When you hold this property, you don't need to pay anything. You got money into your pocket. It doesn't affect your lifestyle. Actually, it helps you improve your lifestyle. I show people the cash flow. Yeah, you have a look. And this is my property. My property is 903. This is a cash flow. That's how much rent I receive. 36,000. 122, that's water usage. So the tenant pay for the water usage. And then, this is all the expenses. This is a real scenario. I consider everything. Even I pay the annual package fee for the lender, the body corp fee and the council rates, insurance fee. Because I pay body corp fee, that's why insurance is cheaper. If it's a house, it will be close to 1,000. And interest, I got these two add together because one is fixed, another one is variable. So add them together. And letting fee, letting fee is 1 week rent. The agent commission, like this is repair fee. See, for the new properties, you don't really pay much for the repairs. I will show you another property I have. You will see how much I pay for the repairs. Everything add together, 26,000, including interest principal. This is not just interest plus principal. So everything together, net is 10,000. So I got 10,000 into my pocket every year. Plus, you see the yellow part, yellow section, that's depreciation. So what's depreciation? That's the things I can claim back from the government, from ATO. Depreciation is not the real loss, it's a loss on paper. So if you don't know how depreciation works, maybe contact us, contact the people who invite you to this webinar, and then he or she can explain to you how to use depreciation to increase our cash flow. So I got 10,000 into my pocket. After depreciation, I can get another at least 5,000. So I got 15,000 into my pocket every year. That's a good thing. And I also got the capital gain at the same time. It doesn't affect my lifestyle because I got extra income. Even interest rate goes up, I think that 15,000 is enough to cover the extra interest I pay to the lender. Yeah. And look at another example I have. This is my property in Sunny Bank, a house. That's what happened. Structure issues. Yeah, it's old properties. So because of this, my property actually weakened for 2 months. And this property I purchased for 685,000. It's 10 minutes from about 11 or 10 to 12 minutes walking distance to Market Square. Or if you walk fast, maybe 10 minutes. And the rent, this I pay 685. So my neighbor sold his property last year. So very similar to my property in the same street. It sold for 950,000. So from 685 to 950, it's about 50%, or maybe slightly less than 50% capital gain. Even we say 50%, so this will be very similar to this apartment I have in South Brisbane. But what happened is we need to look at the cash flow. when we look at the investment return, we can't just say how much you pay for, how much you sold for, and how much capital gain, whether it's a good investment or not. We need to see the holding cost. I'll look at the holding cost. This property, you see that 24,000. It's less than $500 per week. If $500 will be how much? Maybe 26,000. So less than $500 per week, for this property. And for my apartments, similar price, but the rent is over $700. And look, this is water usage tenant pay for. So that's add together. You do all this, council rates, insurance, interest, everything, repair. Look at the repairs. 2,000. Yeah, I paid. And at the end of the day, it's $2,000 into my pocket. There's no depreciation because it's more than 40 years old. So I only got 2,000 back. It's not bad. Still got something back. Can still buy, some chicken wings. Yeah. But when the interest rates start to go up, this will start to drop or will become negative. It will start to affect my lifestyle. If just one of them, it doesn't really affect my lifestyle. But if I got too many, yeah, so that will be big issues. Yeah. So that's what we want to share with everyone today. When the interest rates start to go up, it doesn't mean property value will drop, because we look at the history. There is no direct relationship between interest rate and property value, because the property price is affected, is determined by supply and demand, not by interest rate. The interest rate high, it probably will drop the demand. But we also need to look at supply. If demand dropped 10%, but supply dropped 20%, what's going to happen? Right? You can't just look at the demand, you also need to look at supply. That's why at some place we want to tell people to look at the fundamental, not just one factor. If just that one factor can determine the price, everyone can be the expert. You just look at interest rate. Interest rate goes up, we see property value is going to drop. Interest rate drops, we see property value going up. But in the real life, it's not the case. No one can predict. That means interest rate is not the only factor can affect the price. The main factor is supply and demand. We need to look at these two things together. We need to look at the rent. When the rental market is soft, that's the time people need to be worried, to be a little bit concerned. But at the moment, the rental market is still very strong, and the property value in Brisbane, Adelaide, and Perth still quite strong. Right? And also, we have looked at about in the current market, what type of the property perform better. We see, affordable property perform better. The area like Red Bank, like Cambodia, even people think this area is not as good as Jindalee and Sunny Bank. It depends on whether you buy it for investment or yourself to live in. For us, if for investment, you want to get something good cash flow, good capital gain, not just feel good. You feel good, but no good capital gain. The rent is not that good. It make you feel bad later on. So, we want people to see the current market, what type of the property perform better. It's the good cash flow property perform better. And if you choose a good, projects, a good product, no matter it's house or apartments, they all perform. And when we see the performance, it's not just about the selling price. It's also about the holding cost. We do investment. We don't want to sacrifice our lifestyle. Yeah, I think this is what I want to share today. What do you think, Richard?
Yeah, it's the same. We don't just saying it's the good time to buy or it's good time to sell. We are doing this ourselves. Both Junior and myself, we are investors. We heavily invested in property market. Currently, I just did a refinance for a couple of my properties to get some equity out, and I'm actively looking for new opportunities. I think it's fundamentally it is very strong, especially if you look at the rental market now. It's already strong, and it's going to get stronger. You look at the last 3 years over the pandemic, we're losing people to internationally. Southeast Queensland, we're losing about 17,000 people per year over the last 2 years to overseas. But overall, we grew 30%, 30,000 people per year, roughly. We have a lot of people came from interstate, and Queensland has been always strong on interstate immigration. But once borders open, the people's gonna flow to Queensland more. Even though we are not as strong as Sydney and Melbourne in regards to international immigration, but we are still better off, will be a lot better off than native. If you look at pre-pandemic, we're roughly getting between 10 and 30,000 people a year from overseas as well. So that's like 20,000 people in difference. Those 20,000 people come to Brisbane, they're going to have a place, they need a place to live. Where are they going to live? Affordability is a big issue for the current government. I spoke to the Lord Mayor last night, actually. He wants to change the debate currently because every time they want to do more developments, they got very strong pushback from the community. Now he's saying we need more properties to keep the affordability, to keep Brisbane an affordable place. But it's not that easy. Developing is getting harder. It's hard to supply. We have constant population growth. We have constant demand. And we have those massive infrastructure investment into Brisbane. So long term, I think in the next 10 years, it's a great time for Brisbane. Personally, I'm investing in.
Yeah, I agree. Yeah, like for myself, yeah, I think now is a good time to buy the properties because early this year, people, fear miss out. So they pay 20% over the market value and they probably still couldn't get the property. But now they have a big options to choose. The interest rate is not going up forever because if we look at these things, the reason interest rate drops at that time because economy wasn't good during the financial crisis. We all know when interest rate goes up, it hurts economy. So economy now is actually under the pressure. They can't keep increase the interest rate like this for quite long. Otherwise, the economy will be crashed. So what they do is once inflation is controlled, the interest rate will be stabilized for a few months. And if the economy doesn't come back, it's not going to improve, then they are going to drop the interest rate. When they start to drop the interest rate, what's going to happen? Will happen like what happened last year. At that time, it will be too late to buy the property. At that time, you won't have opportunities to choose properties. At that time, you probably have to pay over the market price to buy the property. So why we don't do now, when other people, don't understand the fundamental of the property market, when they are scared, we should feel greedy, So that's how I think, yeah. And I see one question people ask, yeah, at some place, how we are different compared to traditional real estate agent. Richard, can you answer that? How we are different?
It's a long. I won't go into too much details, but Basically, a traditional real estate agency work for the seller. They work for the vendor. When you say a traditional real estate agent like Ray White, LJ Hooker in the suburb, they actually sign the Form 6, the agreement with the seller. They charge to the seller. Even though when you go to the open homes, they treat you really well. They made you look like you are their clients, you are their customer, but realistically, their customer is people who's selling the property. So their job is to do the marketing for people who's selling the property.
For seller.
For the seller, yes. And they charge a fee to the seller to do that job. And they want to sell as much as possible. That's why they do auctions. In auctions, they want to drive up the emotion. So when people bidding against each other, they can achieve this high price. The reason why they want you to go to an auction is they want to drive the price high. We're on the other end. We're working for the buyer. So we want you to bid rationally. We want you to buy the property, not only be informative, but also you'll be very well controlled within your budget, very well controlled within your scope of targets and goals. People have different goals, and we can set up strategies for that. We're working along the buyer side. I actually just came back from an auction before this webinar. I was there to bid for a client. The strategy we set is we won't bid anything over 850. And when the auction starts, the bid went up really quickly. It just went up to I bid 825 and another person bid 850 straight away, and then I stay away. But and the agent kept pushing me for another offer. I said, no, this is my final offer. The funny thing is, when I walk out the auction room, they pull me back. They say, would you be interested to pay 835? I said, was there another person paid 850? Why did you ask me for 835? He said, oh, the person who bet 850 is a vendor. So the seller was in the auction room, pretended to be a buyer to achieve the higher price.
Big buyer.
Yes. But I pull up at 850. We set a target. We say I did the very thorough research to set my price to be 850, and we set a strategy how to get to 850, etc., etc. Well, to cut the long story short is, if you don't have a thorough understanding of the current property market, and if you bid not rationally, it's very easy to overpay for a property.
Yeah.
So
like some places, basically we have professional people to help people to look for properties. We don't have that emotion. During the auction, it's basically about emotion. People want to get people buy very emotional to pay higher price. But at some place, because we know the market very well, and we are not that emotional, that's why we can control the price very well. Yeah.
And it depends on the different market too. I bought a property last year. The owners was asking from early 600, and a final price I've got it for 680. How I got it is there was another offer at 650, and I said I'm willing to bid it by $30,000, and I'm willing to do an unconditional offer. What I wanted to do is you present this offer to the seller. I want this done before auction. It depends on the market, right? So I got that property. Now the valuation is close to 1 million. So last year, I know the market is different than now. So we use different strategies. So what we can do is we analyze the market, we evaluate the situation, we set up a strategy suitable for you.
Yeah, I remember early 2020, just during the pandemic start, like Richard, myself, and also our colleague, everyone, we knew at that time it's good time to buy the property. So myself bought my owner-occupied home as well. I remember another local selling agent, he actually sold his property because he was scared. He told people it's time to buy. He lists the property to sell out, to tell people to buy, but he didn't have the belief. And he doesn't really know the market. When he hears the news, they say property value is going to crash. So he sold his property out. And then now he regrets. He doesn't have, he's still renting at the moment. So that's, even it's all in the real estate industry, but it's very, very different. Yeah. So the experienced real estate agent, they understand the market, they believe it, they do it, and then they provide guidance for buyers as well to build up the confidence. Of course, if we think the market is not good, we tell people don't do it. But because at the moment we look at supply is very, very limited, and also because the rent is very strong, and also we have, the Olympic Games, in a few years' time, and this will create lots of jobs. So we know still got lots of potential there. When Sydney hold Olympic Games, property value for that 10 years almost tripled. For us, we only increased 30%. We still got a long way to go. We need to look at the big picture for the next 7 years, 10 years, instead of the next 7 months to 10 months. So yeah, so this is what we do tonight. We normally provide strategic consultation. We normally charge a fee, but tonight, whoever join this webinar, you spend your time here from the beginning. It's almost 1 hour. We know you are serious. So if you are serious, you come to us. Talk to the people who invite you. Or if you come from the YouTube or from somewhere else, no one invite you, just from our marketing, you scan this barcode. Yeah, you scan this and register your name, and then you will receive this complimentary consultation. So we understand your situation. Based on your situation, we see, what type of the property may be suitable for you. For example, the people, they are doctors. They have very good income. For them, when they buy properties, they need to focus on good capital gain because they already have very good cash flow. But for some people, their income is not strong. If they buy the property, doesn't have good cash flow, just look at the capital gain, like the property I bought in Sunny Bank. If cash flow is not strong, when interest rate goes up, it's very hard to hold that property. So when you feel hard to hold the property, when interest rate goes up, when something come out for you to repair, spend $2,000, you will lose confidence. You will sell it, and then you will think investment is not good. And in a few years' time, the property value will keep going up, and you miss out the boat. So that's why we want to provide this consultation for people. If you are serious, if you want to know whether now it's good time for you to buy and what type of the property is suitable for you, everyone's strategy is different. Some people, they already bought 10 properties. They don't have to buy now because they already have enough portfolio. Some other people haven't bought any property. They should buy now, no matter what happens in the next few months. Because if the market, even it drop a little bit, it doesn't matter. You hold for 10 years. But if market goes up, you probably won't be able to buy anything forever. So everyone's situation is different. When your situation is different, your strategy is different. So if serious about your future, not just buying a property, but also build up your passive income to change your income structure. When you retire, you don't have to rely on super. You have a decent amount of passive income. You can sell one property to get a bigger amount of money to do whatever you want to do. We need to plan now. When the property value doubled, it's too late to plan. Brisbane still affordable now. So I hope tonight is information here is valuable for everyone. And it's already, how long? It's already 18 minutes. I think we stop here. Richard?
Sure. All right. Thanks for listening, guys. If you want the complimentary session and also the latest market report, contact us.
Yeah, if you want to get this PPT PowerPoint, scan this barcode. We will send this PPT to you. Okay.
All right.